Hey everyone, welcome to the live stream. Today is Tuesday, November 5th. Today is the day when in the US we have elections to vote in the president as well as a lot of races locally to your area, your state, and it's a big day. I got my vote in about a week and a half ago, and I imagine many of you attending probably already voted by this point, and we'll see who wins the election. Probably going to be very late tonight, maybe even tomorrow, before we get an idea of who's ahead. And if we're lucky, we'll kind of get a decisive win one way or the other for the presidential race. And we'll see who is going to take over the White House for 4 years beginning in January. More locally, it takes a little while, maybe for some congressional races where they have to count votes, make sure it's correct. All the recounts get recounted and so forth. But for the presidency, if I follow kind of history, it typically just gets determined, maybe unofficially, but we kind of know who is ahead, and then within a week we pretty much know who won. So we'll see how it goes. We'll see how it goes, and I will be tuning in later today to see what's going on. It's nice to be in California. We see the East Coast close their polls, and then they start counting ballots, and some races get called state by state. It's a pretty fun night. It's interesting, I should say. And it's great to live in the U.S. It's great to participate in our democracy. And we'll see how things play out. And it's good to have some people on already. Looks like Android PC. Thanks for tuning in, man. Good to see you. You are a regular. Bad Omen. What's up, man? It is good to see you, and I appreciate you tuning in. It is going really well. Thank you. My portfolio is doing great. And today we had a really nice rally. Um, the Russell was up 1.88. Go small and mid cap stocks. Beautiful. Probably a stock that's in here that made a big difference was Palantir. Palantir was up above 20%. That was phenomenal. The NASDAQ did really well, up 1.43%. S&P 1.3%. Dow up more than 1%. Really nice green on the screen for the United States. China getting on the action. The Shanghai Stock Exchange, where most of the Chinese stocks are listed, up 2.32%. Japan up 1.11%. It's like a global rally on the US election day. Man, we should have an election every day. I'm all for it. I think the candidates would probably wear out. They'd probably keel over from exhaustion. But man, if it's going to result in this kind of performance, I'm all for it. All kidding aside, it was an awesome day. Awesome day. I'm going to go over a couple of symbols that are stocks that did really well. We go over Coinbase, Nvidia. Big news on Supermicro. They also announced. We'll go over that and see what they had to say. I know they're embroiled in a lot of controversy, so we'll take a look. Brad, very good to see you. I hope you're doing well this evening, and we'll take a look at these stocks. Now that we're getting away from these big, massive stocks, if there's a stock you want to look at or a topic you want to talk about or you want me to talk about, please put it in the comments, and I'll try to cover it. I'll try to comment on it, and would appreciate that. All right, so let's take a look at what's on tap. So today we had a total of 172 companies announce their earnings. No gigantic names, but some recognizable names, right? Ferrari announced today, Thomson Reuters, Apollo Global. Probably not that recognizable to everyone, but that's a pretty significant, I believe, private equity investing kind of company. It's kind of like a small Berkshire Hathaway. Cummins, which is an industrial stock, they make engines, very well known. Coupang. So I'll take a look at some of these, and I'll also look at Ternium, which is a stock that I own. they announced. We'll look at Super Micro, they announced. And I think those are the stocks I'm going to zero in on. All right. So, really active day of earnings, and tomorrow is going to be even more active. So, Brad, you've got a question on stimulus. I don't know if they're going to announce more stimulus this week, but I would say that when I saw the market in Shanghai really rally, I looked for news stories, and on the Discord, Shadow Guy did me the favor of sharing a news story, which shows that their economic data is showing that the stimulation that they have been implementing is working. So that's good news. That's why stocks rallied. If the market in China really starts to grow, if stocks begin to rally, it's going to be really good. I know that they have to get their real estate market in order, and the government is trying to do some things to really get that part of the market stabilized and not have it be just an albatross of problems. Just kind of get that squared away and let the Chinese economy really do well. So I'm not aware of any additional stimulus, but that's the extent that I've done my research on it. All right, so let's take a look at Apollo. So Apollo Global Management. Now, this company reminds me a little bit of a small Berkshire Hathaway, Warren Buffett's company. This is a private equity firm specializing in investments in credit, private equity, infrastructure, secondaries, and real estate markets. So they both go private, public markets. They do buyouts, distressed buyouts, debt instruments. So these guys are just an asset management company that is, taking advantage of certain market conditions. And their stock went up nicely, up 7%. They announced before the market opened, so the market was able to digest the numbers they announced, and it really liked what they had to say. Up 7% is very good. For the past year, it's been a real winner, up 75%. And over 5 years, up 241%. Wow, really good stock. This stock pays a small dividend. Analysts do think it's a little expensive, that it's about 9% too expensive, priced a little too high. The PE seems reasonable. PE of 15 for the current year and 18.61 for 2025. So that's not too bad. So the company, we have the most recent quarter that was closed in stock analysis. And the growth is really good. Year-over-year growth of 20.81%. Very good. You saw really accelerated growth. Now, what's interesting about this company is, they've had revenue, wasn't all that high about 7 years ago. It started to grow, and they've become a $32 billion revenue company. Wow, incredible growth. I imagine they acquired businesses and so forth to really build up that revenue, and they're a substantial company. So great job on their part. I don't own any companies like these. I like understanding the business and then investing in it. And Apollo is almost like a mutual fund, and they were doing really well, probably better than any mutual fund I can think of or ETF that I can think of. But they're definitely have been a high performer. Man, I wish I would have understood them better like 2 years ago, because they've done great. So congratulations to anybody that owns APO. Overall, so this is a really high performing stock. I don't know how to quite analyze a company like this because they own a bunch of different companies, both public and private, as well as they go into a bunch of investments. So I'm not sure that I should be using cash flow or, maybe earnings per share would be a good way to look at it. But that's, I think, one of the things that makes me apprehensive about an investment like this is I don't know how to analyze it. It's kind of an ETF. So do I analyze it based on history? Well, I rarely ever do that. I don't know anybody at Apollo. I'm not really familiar with the firm. So it's a tricky one for me to review and analyze, but I just wanted to cover it since it is the biggest market cap that announced today. So Android PC. China sues AstraZeneca. So they sued AstraZeneca over what? COVID vaccines or? So AstraZeneca is down 7%. So they're trying to come out with a weight loss drug, and it underwhelms investors. And they're being probed in China. So I think this is the story. Corruption, huh? AstraZeneca is not a Chinese company. In a second, I'll see if I can find out where they're headquartered. So they're being investigated. So after dozens of the drug maker's senior executives in China could be implicated in the largest insurance fraud case in the country's pharma sector. Yeah, that's going to be a problem. If there's a lot of truth to that, that could be a lot of loss of credibility, reputation, probably some fines. They'll probably be closely watched by the Chinese government. So we'll see how that plays out. That is big news. So coming back to this company, let me take a look at their profile. They're a United Kingdom company. Okay. They are a big cap company, 204 billion in market cap, revenues 49 billion. Over the 1 year, it's just breaking even, 3.61. Wow, look at this drop. The stock was at $87 in late August, and it's really dropped down to 66. Now, if the problems in China are kind of overblown, yeah, it might be a pretty good opportunity to buy a company that's discounted. Let me look at just a quick valuation using their free cash flows and earnings per share and see, is it really discounted? And maybe it is worth the risk of it clearing things up. If it clears things up and it rallies, investors would really benefit, especially if their weight loss drug, if they figure that out successfully, that could really be a big positive for the company because they would grow their revenues and so forth and be competitive with Eli Lilly, as well as I believe Novartis, which is the other obesity drug company. So AstraZeneca, they've been growing. They grew really nicely in 2021 and have been growing ever since. Quarterly growth looks really good. It's actually accelerated a little bit. They were at negative growth for a couple quarters, slow growth, and then they've been accelerating their growth. That looks really good. When are they going to announce? November 12th. So maybe November 12th gives them an opportunity to clear some of these, stories up, clear up what's going on in China, potentially. And we'll see. Now, and Mike, good to see you. I will take a look at Devon Energy. And they just announced, we can take a look at that. DVN, Devon Energy. All right, so taking a look at their cash flows. Since they're a pharma company, I'm expecting good cash flows, and here they are. So they've grown their cash flows nicely, up to about $9 billion in free cash flow. They're a good growing company. I would probably value the company at $150 to $200 billion, depending on how much debt they have on the balance sheet. Right now they're priced right at 200 billion. So I don't know that they're highly discounted based on cash flows. I would say that there might be a modest discount, but nothing too exciting. When I look at their debt, and I can probably look at debt in the statistics far easier. So they have net debt about $26 billion. So yeah, I mean, it's the stock price is up to a level that I think is fairly priced. It's not showing that it's discounted because of these negative stories. If we look at the projections by analysts, only five analysts. With such a big company, I'm surprised that it isn't being covered by more analysts. Now, when I look at the projections for their profits, it looks good. They're going to keep growing their profits, and the PEs are quite reasonable. Low teens. That looks really good. So, for the time being, I don't know that it's looking all that great. I think the stock is fairly priced. It's only gone up 37% in the 5-year. Huh. Yeah, to me it seems fairly priced. It doesn't seem all that exciting to me, is what I'm realizing. But they announced on November 12th, if they announce good news on their obesity drug, if they clear up China, maybe the stock rallies. It's really been on a drop for the last month or so. It's really been dropping. So it'd be a stock worth keeping an eye on and seeing where it goes. There's a lot of options in this space. Pharma, you've got Eli Lilly being the most valuable. What's interesting is Eli Lilly is also, I think originally it came out of the UK. I think now they're showing that they're headquartered in the US, maybe because they acquired so many companies in the US, they just moved the headquarters to the US. But it looks like UK is a big player in the pharma industry. So interesting company. Thanks for bringing it up. All right, Devon Energy. Oil prices have been moving up. They moved up nicely today. They moved up yesterday and are in the low 70s right now, $72, $73 a barrel. That's good news for Devon. The stock was up a little bit today. They announced today, and they're down a little bit, 5.15%. I'm not sure if what's their market cap? 25. So they announced after the close. So the market's looking at the numbers and no big move, which is interesting. Analysts think it's discounted substantially. Nice dividend at 5%. Market cap's 26 billion and revenue is 14.75 billion. Oil companies have been seeing their stock prices not really perform great in 2024 because oil prices haven't really moved up. If you see oil prices really go up, then oil stocks go up. And in this case here, this stock is down about 17%. Now, Devon, let's see here. Devon Energy is an independent energy company, engages in the exploration, development, and production of oil. So they are on the upstream, as they call it, of the oil business, where they're exploring, finding the oil, extracting it out of the ground, and getting it to the market in raw state, in crude oil state, right? In case of natural gas, that gets piped and then it gets distributed by another company. All right, so that looks good. So the revenues have been dropping due to oil prices. It looks like Devon continues. I don't know that they've loaded the most recent quarter. It doesn't look that way. But historically, the company has been profitable. That looks good. They've been generating cash flows. That looks really good. So those look good historically. But let's take a look at their investor page and see if I can get a glance at what they're announcing to see what the quarter looks like for Devon Energy. Okay, so here is the earnings release. Okay, so Devon is in Oklahoma City. They delivered net earnings, which is profit, $1.10 per share. And they exceeded their guidance of how many barrels of oil they produced by 4%. They generated $1.7 billion of operating cash flow, 786 of free cash flow. And I believe that's in the quarter. So that's very good. So free cash flow Q3. And they announced their dividend at 22 cents per share. And they're acquiring a business. Okay. So the announcement looks positive to me. They have very strong numbers. Looks like it's a well-run company. They probably don't have a lot of cost, which is why although they're seeing lower oil prices, their costs, they probably don't have fancy offices and a lot of expense and a lot of employees. So they remain profitable. Very good. So here's your statement of operations. So this is 2024 compared to 2023. This is their third quarter. Total revenues actually went up. So that looks good compared to last year. So that looks good. They're profitable. Lower profits than last year if you compare the same quarter. Okay. So the business is operating quite well. They did produce more oil than expected. Balance sheet, cash balance is looking pretty average to previous years. Looks good. What about their debt? How much debt do they have? Long-term debt of 8.8 billion, call it 9 billion. So about 9 billion of debt, and I'm imagining that shouldn't be a problem. Their revenue. So I'll check that against EBITDA in a minute. Okay, so cash flows. They have good operating cash flow quarter after quarter. Okay, looks good. CapEx, they're putting money back into the business. They have to keep building these oil derricks and the operation, all this equipment to extract oil. It costs money. But the good news is that they produce more cash flow than the CapEx number. In fact, they're on a run rate of really coming in at probably around 3.5 billion in free cash flow per year. So that looks really good. Very good. 3.5 billion for an oil company, free cash flows. I would say the company is fairly priced between 30 and 40 billion dollars. They're priced at 25 billion. So this is discounted stock based on their free cash flows. And if you look at analysts, they think it's discounted at 33%. I think oil prices have not gone up to the same proportion as oil recently. And I would agree that oil stocks are discounted. This is not a bad idea. This is a small cap overall, but in the oil business, this might be, you can call it a mid cap. Not a bad idea. This dividend looks good. They can afford it. I wanted to double check EBITDA. They had 9 billion in debt. EBITDA number is 7.47. They could pay all debt off like in a year and a quarter, a year and a half. So strong balance sheet. So this is a good looking company. It's a little company. If oil prices rally, this stock's going to rally. This stock's going to take off. Over the 5 years, that's a very nice return. 74%. Very nice return for an oil company, especially since they've given up some of those returns over the last year. So Devon's looking pretty good. I am deep into Chevron. I'm waiting for 2025 so I can sell some of my Chevron and maybe diversify into a smaller oil company. I'm going to watch Devon and maybe buy some in 2025. But for now, I don't want to sell my Chevron in 2024. I already have a lot of gains that I'm going to be paying tax on. Anything I sell right now is just pretty much taxable. And if I sell it in January, I can wait at least a year before I would pay the tax. So that's my plan in oil. But again, Devon looks pretty good. Looks like a good company. And Mike's got some comments. So it looks like it reported and went up and then came back down. I mean, the evening tonight, I don't know where stocks are going to go, but obviously most eyeballs are going to be on this election and see who wins. If the Republicans win, oil companies are going to rally tomorrow because it's just going to be expected that they're going to be given a little more freedom to extract more oil, explore a little easier without as much regulation. If the Democrats win, oil companies might take a hit. I don't think it's going to be substantial in either way. It's just a reality, right? I'm not sharing anything that should be new to anybody who's invested in oil companies for a while. So we'll see what happens tonight. I think eyeballs will be on the election. And I think based on that result, Devon will go up or down, excuse me. Yeah, I think their financials, Mike, look really strong, really well operated company. I can tell that they have very little expenses, and that's a big positive because the company, if they operate in a frugal way, they just keep a lot of their profits. They don't have expensive offices. They don't have too many employees that they have to pay and so forth. So their financials look really strong. So Brad, you bought into Hal and have done pretty well. So you bought into Halliburton. Good for you. I like Halliburton. It's a good sized company, 25 billion. They're they're one of the players in the fracking business. They really specialize in it. Fracking is really important here in the US as well as in other places where the oil is hard to extract because it might be absorbed into a lot of sand or shale. And these guys have a process where they could extract it, even though it's in a very corrosive environment. And I think they've got something that makes them different. And looks like it went up nicely today. It's in the green. They too would probably see a change. Although the Democrats did commit, because Pennsylvania is so darn important, they're like, hey, we're not going to get in the way of fracking. But they just don't. That's not part of their kind of standard playbook, I'll call it. The Republican standard playbook is to really support energy companies and let them just create jobs and extract oil. The Democrats are a little more protective of the environment and usually put a little more regulation on oil companies. I don't want to get political. I'm just calling, I think some general takeaways of how each party would affect oil companies. So please don't take it as I'm saying something bad about either side. I'm just sharing with you what I've seen. I worked at an oil company, my first job out of college, 1994. And I thought it was a really cool company. It was totally old school business, and I learned a lot. And, part of what I'm sharing is some I guess some observations that I've seen over the years of how elections affect oil companies. All right. So that is Halliburton and Devon Energy. So looks like, Mike, you're in Devon, PBR, and Oxy. All right. You're in the oil business. I'm into Chevron, and again, I'll probably be selling, I don't know, $20,000 in my Chevron in January and looking to diversify a little bit away from a big integrated oil company, maybe going into a Halliburton or a Devon Energy as being a second play in energy. But I'm glad that Halliburton's going up in after hours. All right, so that was Devon Energy. They announced today. All right, so let's talk about Ferrari. Whew. Now, this company, they don't make a lot of cars, but each car that they make is rather expensive. But where they make a lot of money is their actual licensing, and they sell a lot of products that people want to own. It's a $79 billion market cap company. Revenue is $7 billion. They have a very high PE of 53. Now, the story I heard is that what's affecting the Ferrari business is that in China, they're just not buying as many Ferraris or their products. So I think the Chinese economy, they're kind of letting go of a lot of discretionary spend, especially on luxury items. I think the luxury brands that people like really expensive brands, they were doing well when China was doing great, and some wealthy Chinese consumers were buying those products. But I think that's kind of gone away to some extent, and those companies are finding it hard to grow in China, and that's really affecting their overall income. So this Ferrari announced. Let's see if the financials are updated on stock analysis. I'm curious to see what their gross profit's all about. So their gross profit they're about a 50% gross profit company. That's pretty good. They are an automotive company, but they're a high-end automotive company. It's not like we're buying a pickup from Ferrari for $30,000. No, they're selling cars for, I don't know how many hundreds of thousands of dollars. They're expensive cars. Of course, they have the race team, and they sell a lot of accessories and apparel, and they license their brand. I think that's probably the most profitable part of Ferrari. So they're about a 50% margin company. They are profitable, and they've been growing their net income. That looks good. How's their top line? Top line's been growing, although their growth has slowed down. Look at the quarterly. Yeah, the quarter didn't grow all that well. 6% growth if you compare Q3 in 2024 to Q3 of 2023. So Ferrari isn't booming. It's seeing a slowdown. Their cash flow. So their cash flow is pretty decent. 1.3 billion in cash flow. I mean, the Ferrari business, based on their growth rate, I would maybe pay 25 times this amount. And that puts us at around 32 billion, assuming they don't have too much debt. And they're considerably overpriced based on cash flow. If we look at their earnings per share based valuation, 7 analysts cover the stock. Earnings per share is expected to grow. Not really fast, but it's going to grow. And it looks good for 2025. So PE is still really high. I think it's really high because Ferrari is a premium brand. And I think a lot of people like myself recognize it. I don't own any Ferrari products. I don't own any of their apparel. But I respect it that a lot of people appreciate the brand. I totally get it. It is a really cool company. It has a great legacy. They've got a great F1 race team. Just a lot of good things about the company. But I just don't see fundamentals that are really exciting. I'd rather have a boring company that makes a lot of money. And Ferrari is a really exciting company. But it doesn't seem like they make a ton of money. They make a fair amount of money. They make a good profit, but you're paying a really high PE for it. And you're paying a very expensive ratio to free cash flow for it. So it wouldn't be an investment that I would make. But congratulations to those who made the investment, because I think Ferrari's done well, up 33% over the 1 year, up 159% over 5 years. So to the right investor that understands luxury, great, go for it. I don't understand luxury. I'm not a customer of luxury. Um, I'm happy, you know, eating an In-N-Out burger here in California, and taking my wife out to In-N-Out, and we spend about $25 and we're out the door, as opposed to going to a restaurant and spending $500 on an evening. I think both are interesting, but I think the one that's funner is just putting a t-shirt on and going to In-N-Out burger. So I'm the wrong person to be analyzing luxury because I just don't get it. So I try not to buy businesses that I just don't understand. And luxury is one of them that I just don't understand it. All right. So DJT announced today as well. Oh yeah, I think that stock, didn't this stock have a lot of volatility and they halted trading? You see this volatility here? And they halted trading a couple of times. This stock was really moving. We may be able to see it better on Google. Yeah, it went up. So here's the dotted line, means the prior day close. It opened up higher. Then it really started to tank. It rose. It settled down in after hours. It's actually up in after hours, I guess. So just a lot of volatility. Let's take a look at what they announced. Yeah, they announced today. Trump Media loses 19.2 million in the third quarter. Okay. All right, let's take a look at their financials, see if they've loaded they haven't loaded the financials yet. So let's take a look at their website. Okay, so no debt, very good. Ended the quarter with 673 million in cash, very good. So this is just the announcement. Let's see if they provided the schedules of their income statement and so forth elsewhere. So I don't know that they announced it. Well, it's not here. I wonder if this is it. This was March 31st. So yeah, I'm not seeing their financials. So I guess we'll go back to the press release. I'm not seeing the financials or any other schedule. Maybe this has it. That's just a PDF of what we just read. So they're putting the balance sheet out there, which is good that they don't have any debt and they have some cash. They're saying that they have an operating loss of 23 million in the third quarter. I'd like to see a schedule, and I don't know that they've provided it yet. So they did announce, but they didn't provide an income statement or a schedule that says this is what our revenue was, this is what our profit was. Historically, let's take a look at their historical numbers. So not a lot there, right? Revenue. Man, is this right? Revenue's less than $1 million. Man, it's really low. And then they operated at a loss, and the revenue is really low. Okay. And what's it doing after hours? So it doesn't have a lot of revenue. It has some expenses. It's up 3% in after hours. So where are they getting the rev? I mean, where do they imagine they're going to get revenues? Because this isn't very much revenue. They got to increase revenue because their expenses are much higher. So that would be one thing that I'd want to understand. How's the business going to grow? Interesting. What caught my attention is throughout the day, I think trading was halted because there was just so much, I guess, volatility in the stock. It's a $6.61 billion market cap company. Wow, look at that. They IPO'd back in 2021. They really reached a higher stock price, almost $100 per share, came back down to 15, really went through the roof, settled back down, and then recently more than doubled. So if you were in the stock September 16th, geez, you almost tripled. No, you doubled your money and then some. That's a pretty nice return. So if you drop some money into it, just hard to invest in the company that doesn't have a lot of revenue. It's hard to see the future. I'm sure if Donald Trump wins the election, this stock's going to be up substantially tomorrow. So I think that's basically the story on the stock as I see it. So, yep. So that one announced today. All right, Mike, you better listen to the boss at home. Good luck. Have a good night. Thanks for tuning in. Shadow Guy makes an appearance. Hopefully you're doing well. You see a lot of Maseratis, huh? Interesting. Cool. Yeah, I think Stellantis, I think Volkswagen owns a lot of these big brands. Of course, they own Porsche, but that's kind of a homegrown brand, so to speak. They probably, I think the Volkswagen company started Porsche way back when. But Volkswagen also owns Rolls-Royce, and they own a couple like really cool brands. Lamborghini and Maserati's owned by Stellantis. Interesting. All right, cool. And thanks for tuning in, Shadow Guy. Appreciate it. Thanks for all the comments too, by the way. And congratulations on your investment in Palantir. All right, so we went over DJT. Let me close a few browsers here. Let's talk about Supermicro. So, holy smokes. They were up like 1 or 2 days after they really cratered. And now they're not going to have a good day tomorrow. The company did announce that the board of directors don't see they're not saying that, hey, we're seeing a lot of problems. But the board of directors, I'm not quite sure if I'm going to believe them. You hire a public accounting firm because they're independent. They don't have any connection to the company. They're not supposed to, other than it's a paid arrangement, right? The company Supermicro will pay the public accounting firm to review their financials and then communicate an opinion on those financials to see if they are accurate or inaccurate. And this investigation, they shouldn't call it an investigation. The information I read was the board reviewed it. Well, that's the board of directors, and the CEO could be a part of it. Board of directors is picked by the company, and it's a pretty nice gig. They only show up a few times a year, and I think they're compensated for their participation. It's a pretty nice thing to have on your resume and so forth. So at this point, I don't think that's a credible kind of opinion. They should just let an accounting firm look at their financials and say they're good. And we're an accounting firm that would basically lose our shirt if we were making this up. That's what they need to do. They need to have an accounting firm take a look at everything and voice an opinion. They're going to be down in the after hours. We'll see if they recover. And with regards to it's not there yet, but I'm curious to see what they announced in their earnings. Let's see if they did announce. See if they announced and provided numbers. All right, so news. So I don't know if they're reporting, but they're saying that net sales are going to come in the range of 5.9 and 6 billion, which should be on the lower end of their guidance. Their gross profit margin 13.3% because they're a hardware company. They don't make a lot of money on their sales. They are going to be profitable. They're going to have cash of around 2 billion. Total debt is about 2.3 billion, so not too much debt. They're not providing financials. I think they're just guiding, and I think they have to get an accounting firm to participate in their process. So not a lot of information provided. I imagine they may not even have a call because they don't want to answer questions. So maybe that's why the stock is really tanking. A lot of problems over at Supermicro. They got to clear those up if they want to be a stock that investors are going to want to invest in. So good luck to them. So that was Supermicro. All right, so let me go over Thomson Reuters. This is a company that's an information company, and I'm sure you guys have heard of Reuters. They are a global company that provides information for investors. So I'm familiar of them for that reason. And the company, I mean, it's pretty good market cap, 74 billion. They're up 34% for the 1 year. Really nice return. Good job, Thomson Reuters. So looking at their third quarter, I think this one will give me some good information. Revenues were up 8%. Very good. So revenues are up 8%. And sorry that it's really small. Free cash flow up about 12%. Very good for the quarter. So very good. So top line's growing, cash flow is there, they're profitable. Okay. Now, did they announce before or after? So they announced before the market opened. Market did like what they heard. It's up 3.71%. So that's good. PE is a little high, 33 and 42. I mean, they're an information company. It's not like they're providing something that's really must have, right? I'm sure they compete with other media companies to try to be relevant and for subscribers to want to pay for their information. The growth hasn't been exciting. It's been single digit for a while. They did have a good quarter of it being at 8 versus 6. So that's good. Gross profit, not that exciting. That's about 40% gross profit. I would have thought it would have been higher, but not really exciting. Free cash flow is 2 billion. They've really done a nice job of growing free cash flow. Excellent job. It's a slow grower, so I would think that I would multiply that numbers time by about 15 to 20. gets me to 30 to 40 billion dollars in market cap. And to me, this stock is really expensive, overpriced based on the free cash flow the company produces. Analysts think that it's fairly priced. It's just, priced at a premium of 0.02%. So it's pretty much fairly priced according to what they have researched. There is some dissension between the analysts. Some of them believe that, hey, it's really overpriced. Some believe it's going to go up some, but on average, it's fairly priced. I think they're expensive. A PE of 40. I mean, this is a information company. As you look at AI, I mean, AI is going to potentially replace and be a competitor to Thomson Reuters for financial information. So having a PE of 40, I mean, Meta doesn't have a PE of 40. I'd rather own Meta. So to me, it seems really expensive. And I'd rather just buy more shares of Meta if I'm going to be buying an information company. Information companies, I believe, are in the communications. Let's see here. No, it's an industrial. I would have thought this company would be put in the same category as, Google, Alphabet, Meta, which is a communications services company. But I could be wrong. I mean, they are selling the data, so I guess they're not necessarily providing a service, but maybe I got it wrong. They're classified as an industrial. That's a little bit of a surprise. All right, so that's Thomson Reuters. All right, any more comments? No more comments just yet. So let me keep rolling here. Coupang up 4.6% today. Wow, it's really tanking. What's going on? What happened to Coupang? After the close, what did they announce that upset the market? Risky pattern, huh? PE is really high. Okay. It's kind of fairly priced. It's rallied nicely for the year. It's had a rough 5-year. South Korea, and it does e-commerce. A lot of mobile e-commerce. All right. When we look at their growth, it's good growth. It's not exciting. Like 23% is good, but not like, wow, that's incredible. 50% to 100% is incredible. And they are, is this US dollar? Yep. US dollars. So it's pretty good revenue company, 27 billion. That's pretty good. And gross profit, not a lot, 7.3. So that's about 35. No. That's about 30% gross profit margin. It's not very good. It's kind of like Amazon for their e-commerce business, except Amazon's humongous. They're massive, very powerful. This company here, they don't create a lot of margin, so I'm not expecting a lot of cash flow. They were at negative cash flow for a while. They have recently begun to produce positive cash flow, 1.5 billion. And 1.5 billion. They're maybe I would go 20 to 30 times their revenue, and that would be 30 to 45 billion in market cap. And they're on the higher end of that range based on their cash flow. So they are expensive based on cash flow. They are growing that cash flow quickly, but this is an e-commerce company. There's a lot of competition in Asia. Now, that was cash flow. There's 9 analysts that cover the stock. I'm not very familiar with Korea other than it, being a country that's really grown its middle class. It's got a very strong economy. I have a lot of respect for like their products. Samsung's a really good company. Hyundai, very good company. So their profit is really low, 24, 1 penny, 51 cents, 90 cents. And the PE is really high for 2025. Now, when we look at the announcement, so they were up 27%. That looks good. Gross profit increased 45%. That's good. Net income was good. Operating cash flow decreased a little bit. Free cash flow is $935 million for the trailing 12 months. So the cash flow actually dropped. So when you have low margins, it's hard to produce high cash consistently. And yeah, that makes me nervous that, hey, this stock's going to go up and down for a while. It has to, in my book, I prefer to have cash flows be consistent. And if you look at the most valuable companies that have consistent cash flows, this one's not consistent yet. So it's a little risky. But I like their revenue number. The revenue number looks really good. High revenue growth, 27%. And they're already a pretty good sized company. So good job. 27% top line growth. Their gross profit was better than 2023 for the same quarter. Free cash flow did go down, as mentioned. So this isn't the right investment for me. I think I'm going to stick to Amazon and Baba. Those two are doing just fine for me, and I don't need to get out of that lane. We'll see where this one goes. It's been a really wild ride for investors, but I'm glad that anybody who invested a year ago is doing quite well. It's going to have a rough day tomorrow, and we'll see where it goes after that. Coupang, interesting company. All right, so this is Ternium. This is a company that I do own. And this company is a steel producer. They also have some mining operations. Most of their operation is in Mexico. And they also have operations in southern Brazil, as well as Argentina. And I like their geographic location just south of the U.S. so they can produce product, and then the end market being the U.S., nearshoring. And they could also produce rolled steel and take it over to all the manufacturers that now exist in Mexico that are producing appliances and all kinds of different products that have sheet steel as part of their bill of material. So I like that about them. What I don't like is the stock hasn't been doing all that great. Past year, it's down 6%. They do pay a nice dividend, so not losing money year to date, but it's really underperformed everything else. It'd be nice to see this stock do better, but in order for it to do better, steel prices have to rise, and steel prices have not been going up. If we have growth in our future, steel prices will rise, and then this stock will begin to go up and appreciate on its stock price. The company's very well positioned. I look at their financials, even though their revenue is a little lower, or I should say steel prices are lower. This company doesn't have a big expensive, operation, or at least their back office isn't all that expensive. So they continue to be profitable. That's important. They continue to pay the dividend rates. That's important. So I think this is a good hold for me. And over time, I agree with analysts that it's well discounted. And I think it's going to pay off over time. It's just taking a little longer than I would have liked. And hopefully 2025 is a lot nicer to steel producers and steel mining companies. But it's not a bad place to look for good value when, they're kind of beaten down and forgotten. Not a bad place to pick up a good discounted stock. This is my only company that is a steel company in my portfolio. And again, I like the regional location of the company, and I'm going to call it my single stock that's in, Mexico predominantly, and it also has operations in Brazil and Argentina. So Ternium, it's down in after hours trading, and we'll see where it goes tomorrow, as well as long term. I think I'm just going to hold this stock and ride it out. We'll see where it goes. So Ternium announced, I think I updated everything on my valuation. This company continues to produce free cash flows. I used an average because they did have a negative quarter, but over 7 years, they've just been a good cash producing company. So they had to put more CapEx into the business. I don't want to take a super low quarter into an overall analysis. I'd rather use a nice long data set, a long average, and use that as my expectation long term for the stock. When I use those numbers and look at the earnings per share, that is a number that is expected by a number of analysts. Just this stock just is really discounted. So I'm going to hang in there and continue to hold TX. So that is Ternium. They did have steel shipments were up 7% in the quarter sequentially. And compared to last year, it was flat. So their shipments were the same this year compared to last year. On the mining side, they extracted iron ore sequentially up 19%, but it's down from last year. Net sales are down from last year. And I think it's the mining products, the thousands of tons produced or mined went down. So that's part of that drop, as well as, the commodity prices are not in their favor. They continue to be profitable. They continue to have EBITDA. It's just this industry is kind of going through a little recession. Once we start growing as an economy, and the Chinese economy is supposed to grow at 5%, which is going to create more demand for steel, and hopefully commodity prices become more favorable for Ternium. We'll see how it goes. All right, so we just covered a pretty broad range of stocks. Thanks for the suggestions from attendees on stocks to take a look at. And let's see where this election takes us. See what happens and who gets more votes. We'll see. Probably tomorrow morning we'll have an idea of who is winning the presidency, and the congressional races, the Senate races, and all that good stuff. So everybody, thanks for tuning in. I appreciate it. I hope you have a very good night, and I'll probably stream tomorrow afternoon again, or on Thursday. I'm not quite sure which one I'm going to be able to do, but I'll be sure to post it on the Discord as an event, as well as on Facebook, on Discord as just a general comment, and of course on YouTube, it'll show up as a live event. So everybody have a good night. I appreciate you watching, and everybody have a nice night. Take care.